Imagine opening your mail and seeing a refund check from your insurance company. Sounds too good to be true, right? Well, that might actually happen for Progressive insurance customers in Florida. Now imagine living in Nevada. Same company, same year, and instead of getting money back, you're told your premiums are going up. Not once, but twice. That's the strange world we're living in today. Progressive Insurance, one of the largest auto insurers in America, may have to return money to Florida drivers because it made too much profit there. And at the very same time, it's hiking rates in Nevada with back-to-back increases in 2025. How can both of those things be true? And what does it mean for you, the consumer, the driver, the person paying the bill? Let's dig in. Hey, everybody, welcome back to the Airing of Grievances. My name is Reamer, and as you can see, Rob is not here today. But that's all right. Today, I'm bringing both barrels, so buckle up. First, let's back up. Insurance is supposed to be simple. You pay your premiums, and if you have an accident, your insurer pays to repair your car, cover medical bills, and help make you whole again. At least that's what they're supposed to do. But insurers are constantly balancing two sides of the ledger. On one side, they collect billions of dollars in premiums every year. On the other side, they pay claims, repairs, medical bills, and oh yeah, lawsuits. When costs rise, they go to regulators and say, we need to raise the rates. That's the side you and I usually feel. But when profits climb too high, that's where things get interesting. Some states, like Florida, actually have laws to protect consumers if insurers get too wealthy off those premiums. And I'll be honest, I didn't even know such a law existed until I read about it in Repair Driven News. I will link to the article down below. Now let's just take a look at how Progressive's 2024 premiums, about $70.8 billion, were spent according to their annual report and NAIC data. The biggest slice? Claims and loss payments. Roughly 65% of every dollar, that's about $46 billion, went into repairing vehicles, covering medical bills, and handling accident costs. Next, about 4%, roughly $2.8 billion, went to legal and defense costs. That's attorneys, litigation, and defending claims. Insurers don't always break this out separately, but it's a real cost. Then 15%, about $10.6 billion, went to administrative and overhead expenses. That's the offices, IT systems, back office salaries, all that. And then, of course, another 6%, about $4.2 billion, went to acquisition and commissions. That's advertising, sales, and agent commissions. Think about all those endless TV commercials during football games. And finally, we get to profit. In 2024, Progressive's underwriting margin was about 10%, roughly $7.1 billion. Now keep in mind, these are rough estimates. Legal and defense costs, for example, are buried inside broader categories, but the scale is staggering, tens of billions of dollars flowing into each slice. So when regulators say profits are too high, or when insurers say we need to raise the rates, this is what they're talking about. These slices either grow or shrink depending on how the rules are written and where you live. According to Repair Driven News, Progressive disclosed to the SEC that its auto business in Florida may have generated excessive profits between 2023 and 2025. Florida law, and this floored me, actually caps insurer profits. Did you know that? I certainly did not. Two Florida statutes say that if an insurer's underwriting gain plus a 5% margin exceeds the limit over a 3-year period, they must return the excess to policyholders, either as refunds or credits. So in Florida, Progressive might actually have to send money back. They've already filed 2 rate reductions in 24 and 25, thanks to tort reform lowering litigation costs. Sounds great, right? Government keeps insurers in check. Consumers win. But here's my skepticism. If profits are capped in Florida, what stops an insurer from simply making up the difference in another state without such protections? That brings us to Nevada. So if Florida drivers might get money back, Nevada drivers are facing the opposite reality. In Nevada, progressive drivers saw not one but two rate hikes in 2025, according to Repair Driven News. The first hike hit in January, about 5%, affecting 178,000 drivers. Then recently, here in September, Progressive asked for an increase of 8.41%. Now, regulators trimmed that back, but they still approved a 6.8% hike, and that's going to impact over 212,000 drivers effective in October. So in less than a year, Nevada drivers saw nearly 12% combined increase. Progressive justified it with rising repair costs, medical bills, inflation, and claim severity. Regulators agreed partly, but at the end of the day, consumers still paid more. So here's the contrast. In Florida, profits capped, possible refunds, rates cut. In Nevada, rates up, twice. Consumers paying more. Same company, same year, different laws, different outcomes. And here's the big question. Is this real oversight or just a shell game? Push down profits in one state, raise them up in another. It's like squeezing a balloon. Press here and it bulges there. So what can you do wherever you live? Well, the first thing you can do is review your policy. Do not assume that your rates are fair. Number 2, shop around. Loyalty doesn't always pay. Number 3, ask about discounts. Safe driver, low mileage, bundling, all of those things add up. And number 4, know your regulator, the government. In Florida, oversight might mean refunds. In Nevada, regulators at least trimmed Progressive's request, but your voice matters. File complaints, ask questions. That's how protections are created. Here at Nylund's Collision Center, we see how these insurance decisions affect real people, our guests. To insurers, it's numbers on a spreadsheet. To you, it's dollars out of your pocket. Florida drivers may soon get a refund, but Nevada drivers are paying more. It's the same company, same year, different outcomes. So I'll leave you with this. Is this genuine consumer protection or just insurers playing the shell game? Tell me what you think in the comments. And if you want to stay ahead of the games that insurers play so that you can protect your wallet and your family, subscribe, follow along, and stay informed. Because at the end of the day, you deserve fairness, you deserve transparency, and you deserve to know the truth about how this industry really works.